Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachardavez, and joining me is Senior Investment Analyst Rafi Boyajan. We'll be discussing UK data and the outlook for the pound. So Rafi, given the economic slowdown at the end of 2019, there have been hints lately from the Bank of England that a rate cut is on the table. Now, we'll get flash PMI releases on Friday, which could be the deciding factor for the bank before their rate-setting meeting next week on the 30th of January. What should we be looking out for?
Well, the main focus in terms of the PMI numbers will be what kind of a rebound are we going to see in January. We know that up until the December general election, the UK economy performed very badly. We had a string of very poor data coming out of the UK for that period, and that prompted a number of Bank of England officials come out in recent weeks and warn that we might see a rate cut very soon, and we may even have a majority of MPC members now. We know that two are definitely would likely vote for a rate cut, and then we have another 3 MPC members potentially voting for a rate cut as well. So the Bank of England meeting next week could be a close call, and the deciding factor, as you said, will be those PMI numbers. More recently, the data hasn't been too bad. We did see strong numbers for the labour market in the 3 months to November this week, and also we had a CBI survey showing that optimism among manufacturers jumped higher in January. So that's going to be a crucial period post the general election and up until January to see how well the economy bounced back, because there are signs that the landslide victory for Boris Johnson in the general election did bring some certainty for businesses.
Okay, now given all this, what's the outlook for the pound?
Well, the pound has already been under pressure following those remarks by the Bank of England officials. It has stabilized a little bit following that strong job numbers we saw this week. So if we were to get any further worrying numbers, mainly from the PMIs tomorrow, that would fuel expectations of a rate cut, and the pound is definitely would come under more pressure even after that. If we were to get mixed numbers or perhaps some kind of a rebound, but not a very convincing rebound, a rate cut would still be quite likely, because inflation has fallen quite substantially below the bank's 2% target. So if we see a mild rebound, might not be enough to prevent the Bank of England from cutting interest rates. So really, unless we see a very strong rebound in the PMI numbers, rate cut will very much remain on the cards, and therefore the pound could remain on the back foot for a little bit longer.
Rafi, thanks so much for joining me, and thanks for watching at xm.com.